Greetings to everyone and welcome to GPA Trading Services Master Trader Program webinar. We are so pleased that you all could take some time out and be with us. We always enjoy spending time with fellow traders around the world. It's one of our great passions, so welcome. My name is Tricia Albrecht for those of you that don't know me, and this is your first introduction. I am the co-founder and vice president of GPA Trading Services. And as I said, we always enjoy spending time with our fellow traders, enjoy conducting these webinars and sharing our information. We have a lot to share. And also, before we begin, I'd like to say that for those of you in the United States and you're well aware of what has gone on today, we want to say our hearts and prayers are with those that were affected in this terrible shooting. We actually live in Texas, and this horrible event happened in our state, so we're very, very sad and horrified about it, and we're praying for all those that are involved. And we hope the rest of you can say a prayer for them as well. Now, I guess without further ado, if everyone's ready to jump on in, thank you, Jim. If everyone's ready to jump on into tonight's presentation, or today if it's day in your part of the world, we always have people from around the world join us, which we're thrilled to have you. I will go ahead and turn things over to Gary, who's going to walk you through the presentation, and I'll be happy to answer questions. If you have any questions, just type them in and I'll be happy to address those for you, and anything else. Okay? So, as I always like to say, please sit back, relax, and please enjoy this presentation, okay? Thank you so much.
Greetings, everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the creator of the MPA pe3 software. I'm also the educator and the instructor. Couple of things about my brief bio. I've been a professional trader for 20 plus years. I'm considered a technical analysis expert. I'm the creator of that one-of-a-kind custom trading software we call the MPA pe3 software, or the Market Price Anticipator software. We founded GPA Trading Services 7 years ago in 2010. We've been educating thousands of students from around the world over the past 10 plus years, and I've conducted numerous live events, speaking engagements, platinum program. We also offer one-on-one coaching and mentorship programs. If you haven't had the opportunity to peruse our website, this is a screenshot of our GPA Trading Services website. We welcome you to visit it. Tonight's topic is going to be a continued series we call the MPA pe3 Master Trader Toolbox, as our software has so many valuable tools that are a part of the toolbox, and we'll be covering a few different ones tonight and some others in the future. Brief disclaimer, I'm not going to sit here and read that entire disclaimer for everyone, but I would like to highlight a couple of them. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. Persons should only use funds that they can afford to lose and that fits within their overall financial plan as developed by a qualified financial planner. Our rules include never risking more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade, and always adhere to strict, proper money management. That's a critical component. All information in this presentation is for your educational purposes and should not be taken as investment advice, nor as recommendations or endorsement to buy or sell any specific investment, and trade at your own risk. I always like to talk about anticipating future market conditions. If we know where the markets have been and we can anticipate where the markets are going, that'll give you your best chance for a positive outcome or a successful outcome. One of the first critical components that everyone must understand is support and resistance. Now it sounds as basic as all get out, but there are a lot of misconceptions about what true support is and what's true resistance. And the strongest supports and resistance occur when we call battle zones, where it's frequently been former supports that turn resistance, and resistance that's turned back to support, and support turned back to resistance. And we've also found that support and resistance happens in the strongest when it's on multiple time frames. That same number or level keeps showing up on multiple time frames. Next is very important is the trend direction. Trend is your friend. It doesn't mean if you're a scalper, your mentality is to get in and get out, then you certainly can trade against the trend. But long-term and most successful traders trade with the trend. Also, utilizing multiple time frames. You'll see that part of our system, it magically lines up multiple time frames. When the time frames align, you have your highest probability for a positive outcome and a successful trade. The software is unique because it allows us to understand how the lower time frames cycle within the larger time frame. We like to refer to that as the line of progression. And this software is unique because it has an AI component that sets up multiple time frames, and it gives you clues and keys to when those alignments are in effect, and the price is going to move in that accorded direction. So what do we mean by aligning time frames? This is just a graphic illustration. We're going to go to the charts in just a second, but I want to show everyone. If you'll notice my cursor, you'll notice how when price moves, tops and rolls, software is in overbought territory, moves to oversold. And then it rallies back toward overbought, oversold, overbought. So the job of these two indicators is to move from one extreme to the other as price starts to align. Well, you can notice it looks differently on different time frames, same software, but it's on different time frame. So what exactly do we mean by aligning it? You'll notice that the monthly was in overbought territory, started to turn over, at the same time in which the weekly was in overbought territory, aligned in overbought territory together with the monthly, and including the daily was in overbought territory. So this was a critical resistance level at which price was reaching towards, and notice we saw the software lining up across the board in overbought territory, expecting a big down move. And that's exactly what oil has shown, not only because we see it on this chart, but we call this live in our live trading class, as I'm about to show you where oil's headed next, based on the same alignment. Now, following the line of progression means that there are times when the time frames align, but as they start to cycle, remember the job is to go from one extreme to the other, cycle back and forth. And during the period in which a higher time frame is cycling, it takes weeks for a weekly to go from oversold towards overbought. And it takes months even for a monthly to move from overbought toward oversold. And you can see in this example, we're showing the cycling time frames as the weekly is topping and rolling in that down move, as we were overbought moving toward oversold. And the daily started in the same overbought condition, and we call this slingshotting lower and lower and lower and lower and lower and lower and lower. We can anticipate this behavior in advance when we're following the higher time frames as they were cycling down. So I'm just going to call your attention. There's where we were lining up on the weekly. You saw in the previous slide, the monthly was also involved. And then here, the daily started from overbought, moves to oversold. And if you ask, well, what is the definition? Well, you see the red line up here. When you're up near the red line, you're in overbought territory. When you're down here near the green line, you're in oversold. Same with this one. The red line is overbought. Oversold is the green line. And it's color-coded for your viewing pleasure, that when you're in overbought territory, you're thinking of selling. So that's why we have a red line there. And when you're oversold, you start looking for an opportunity to buy when we start to see the green line. And notice, there are times when this will cycle up, but make lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Well, this is typically anticipated because we understand we were moving in the direction of the weekly. So notice, it just repeated itself over and over and over and over. It kept slingshotting lower and lower with the higher time frame trend, the monthly moving lower and the weekly moving lower. That's what we mean by the line of progression. It's aligning the time frames, knowing you're setting up at the higher time frame direction, and you sell the rallies in a downtrend. Some people call this the ebb and flow of the market. More sellers than buyers, but there are times when there's a little bit of buying opportunity and you think, well, it's a good time to go long. I usually don't go long on these, although you could if your job or your goal is to scalp. But mine is to sell the rallies in a downtrend because I like trading the higher time frames. So here's another shot of a currency pair. Same scenario. We have the monthly that is moving in toward oversold territory and is starting to reverse the early stages of what we call the PAI hook, and even before we get a trend momentum cross. And you'll notice that on the weekly, we already started with the hook and cross pattern. And we're going to show you the power of this. The power is when you get a hook and cross pattern, by getting a weekly to hook, it means my daily is going to move from oversold all the way to overbought. So that tells me I'm going to have days of upside pressure. And notice as the daily kept reversing from the same point, the daily did go day after day after day after day after day after day, grinding in a stair-stepping fashion higher. All that was set up by the monthly, starting to turn, the weekly giving you the PAI hook and a cross, followed by the daily moving from overbought to oversold. And of course, you remember that slingshot phenomenon? As the 4 hour during this large move, the 4 hour would go into overbought territory, and as expected, it would start slingshotting higher, higher, and higher as it went in the direction of the daily, which was up. It was going in the direction of the weekly, that was up, and it's in the early stages of a monthly turning. I want you to think of the monthly as a very slow, like a huge aircraft carrier in the middle of the ocean trying to do a U-turn. It takes time for it to start to make the turn, but on the lower time frames as they're aligning, you can get in these trades early, so you don't have to wait months later to get in this reversal. You can do it on a daily or a 4 hour, even a lower time frame. And notice the 4 hour did slingshot higher and higher as we were discussing in the previous slide. Okay? So, following the line of progression for gold, same scenario. We have where the monthly is starting to turn over, but we got the early stage of a rally, and then the longer stage of another trend continuation move toward the downside. So you can catch it early as we're moving towards the upside, knowing that you're going to sell that rally once it's over, and you could even scalp it early on as we started with the initial down move, as this was the early stage of that down move, and then the early reversal starts with the weekly PAI hook and the trend momentum cross. And that goes through the daily and then the 4 hour. And you can see, yes, we did move in slingshot lower initially, then we reversed and went up. All that was anticipated based on the cycles where we were in those time frames. Fair enough? So, enough of showing screenshots. Let's go in and jump directly into the markets. I want to first start off, and we're going to cover a little bit of everything tonight. We have something for everyone. We're going to cover stocks, commodities, futures. We're going to cover a little ETFs. We got a little bit of everything. So I want to first start off with the dollar index. Those of you that were at a previous webinar, I talked about this several weeks back, that the dollar index was ready for a bounce. It's going to go up in what we call a B wave, and then it's going to reverse and come down in a C wave. And when all that's over, it's going to reverse and go way up here to this 120, 125 area. This is important because if I trade currencies, especially like the euro dollar, pound dollar, gold, for example, tends to go lower when the dollar index and the dollar starts to strengthen. But that will change. I'm going to throw that out. In the future, I expect gold to go much higher in the next multiple years, as I expect over the next several years, the dollar index is going to go higher as well. I would get into more of that when we're on gold and some of the other symbols. But for now, I wanted to show you the PAI hook scenario in a live market. So we've been discussing the dollar index, and we talked about buying this weekly cycle up. Once we got a hook and a cross, that gives me the highest probability, ladies and gentlemen, that we're going to go toward a Fibonacci sweet spot. You'll see this repeated over and over and over. So the last time my weekly on the dollar index was in overbought territory was way up here with this swing point. It went down as the monthly was turning over, moving lower. My weekly went from overbought to oversold. It tried to engage up, which you would expect a weekly trying to go against a monthly should fail. And we were in this monthly trend downtrend at the moment during this period where the weekly would stair step lower. In fact, it went from overbought to oversold because we had a monthly hook. I'll show you that shortly here. We started with the monthly PAI hook and a trend momentum cross. So we knew that based on a monthly PAI hook, which is this right here, this hooking pattern, and then the crossover of the trend momentum, hook and cross pattern. What did I say earlier? When you get a hook and a cross pattern on a monthly, it means the weekly is going to move all the way from overbought toward oversold. So notice what the weekly did. Early on, when we had the monthly just starting to hook, it was multiple weeks, which lasted multiple months of the weekly moving from overbought toward oversold. And this was done so live in class. We said we're going to have a nice huge pullback. And most recently, we discussed this bottoming reversal pattern for the next PAI hook and trend momentum cross on the weekly, that we were going to buy the dollar index, sell the euro dollar, sell the pound dollar, sell several other currency pairs based on this observation. And I can assure you, Andrew, we're going to the sweet spot. The highest probability is when you get a hook and cross pattern, the steeper the slope and the more the angle in the separation of the trend momentums, the higher the probability. And I said this weeks and weeks ago, which has now been a few months, and I still say we're not over yet. We still have more to the upside to come. And as long as this weekly remains up, we know what to do based on our entries. And again, it's easy. When a weekly trend momentum and PAI are up, you have a very specific tactic of buying daily slingshots higher, 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 and higher in the coming weeks. And while the daily remains up, you buy 4-hour slingshots over and over and over and over and over and over. So yes, the dollar index is just not going to continue to go straight up. It's going to continue to stair step its way towards this target zone we see on this weekly. I guaranteed it weeks and weeks and weeks ago that we were going up here, and it takes patience. You're talking about a weekly cycle that doesn't just move in a session or two or a few days or even a few weeks. It takes months because a weekly takes week after week after week after week after week after week after week as it cycles toward overbought territory. Well, you can guess where the high probability is. When you get a hook and cross pattern, it equals at least a Fibonacci sweet spot location. And we still have at least to the 38.2, a 50, and a 61.8. Now, the reason I started off tonight's topic, or beginning of the chart, with this Elliott wave count is if this is the A going up in B, it depends what type of correction, how high is the B going to go before it reverses. Well, someone would say, well, what if this 4 is already over and we're in the early stages of going up? Well, the beauty of that is, Eric, it doesn't matter if I'm buying it because I know A is over going up in B, or if it's 4 over going up in 5. The difference is it's going to go much higher if it's the latter and ultimately make another move down and then reverse and still go up here. So I'm going to put it out there. I would say over the next couple of years, could be sooner based on world events, markets imploding, etc. It could happen sooner, but we're definitely going to go up here. I guarantee that we're going to see the markets and the dollar index end up around that 120, 125 area. This is our target zone. Whether it's the A, B, C, then we go up, or it's the stair stepping and we keep going from this point forward. But it's not going to happen in a month or a week. It's probably going to take multiple months to a year or longer. Now, add to this the projected world economy. When the European markets implode, and I think the Japanese markets will implode, all of those trillions of dollars are going to start pumping into the U.S. That's why I think the Dow is going to continue to go higher and reach 30,000 and above and continue to go much higher. I think the dollar index is definitely headed this direction. And you're going to see a lot of stocks in the U.S. markets continue to go much higher, like the S&P, etc., because all that money needs to go somewhere. You tie that into once the markets start imploding, then gold and silver are going to go way, way up as well. And don't think, well, it's only the U.S. that's going to be able to skip this bad market imploding scenario. It's the credit bubble. The U.S. is going to have their turn, but I think other countries are going to happen first. So why is this important to go up here? We'll watch it over the next several weeks, but I want to show you this software works on any symbol, any market, on any time frame. Once you learn the hook and cross pattern, it works across the board. So if you're not a longer term trader and like to trade on the higher time frame, you can do the exact same thing with a 15, a 5, and a 1 minute. The same hook and cross pattern means that the lower time frame is going to go all the way toward overbought. So when we hooked from oversold, started this hooking pattern weeks and weeks ago, it meant my daily was going to go from oversold all the way to overbought, and it's been slingshotting higher, which is still the recommendation for the coming weeks and months. And you see my tactic I put these on the chart for our class and tell everyone, now you know. I'm going to buy a daily and 4-hour slingshot as long as that weekly stays up, and expect we're going to go at least up toward the sweet spot location, if not higher. What does that do for the euro? And I'm going to jump into some stocks and other things. The euro is clearly going lower in a correction. If it turns out that this is correct and this is the A going up in B, then the B going down in C, then the 4 up in 5, then the euro is going to go down while the B wave is going up for the dollar index. They're inverse pairs. And when this B wave is over and the dollar index starts to go back down again, then the euro is going to go back up again. But once this is over and we start moving in this direction, the euro is going to go down thousands of pips below parity and much further. So right now, as we go to this one here, we can see the same inverse. On the dollar index, the trend momentum and the PAI were up. On the euro dollar, the trend momentum and the PAI are down. So I guarantee that based on the cycles, you're going to see this continue to stair step toward this zone. The 38.2 starts about 114.20 range. So we have about 180 pips to get there. Could go much lower, but that's where we're headed. And those of you that are with our service have already been in this trade for several weeks now, a few months, and we're up 600 plus pips and counting, knowing we still have several more to come. And remember that little B wave, if it extends very deep and goes much higher on the dollar index, then the euro could go down hundreds and hundreds or more, go down to 107 area. That would be 900 pips. Could go deeper, but it's at least going to go here, simply by a hook and cross pattern. S&P, same scenario. I think the S&P's target next up is 2614. If the markets implode in Europe and Asia, then we're going to go to 3,000 and above, no questions asked. As those trillions of dollars start hitting, they've been trickling in the U.S. markets, but when those markets truly implode, all of that money is going to come flooding into the U.S., and the S&P, the Dow, the NASDAQ, all of those are going to climb much higher. But in the interim, even without the market imploding, it's been trickling in on a steady basis, and we're seeing this uptrend continue. And the next stop will be 2614. Well, does that mean, Benjamin, that I can buy S&P Mini right now, and it's going to go straight up from 825.83 to 2614? No, it's not. It's going to stair step its way up there. The time frames are cycling. And that's why it's the ebb and flow. When the time frames cycle with the higher time frame trend, then you get them to go against it. You get a pullback with it, against it, with it, against it, with it, against it, with it, against it, etc. And as long as we stay above this 2540 support zone, we have no other option but to go up here towards 2614. Now I like to give a plan of action, then an alternate plan of action. It's possible this little 3 wave could have been over here and we're in a little stair step down in 4, but regardless of which one it turns out, it's still going to reach this 2614. So how do I know if it's going to continue to go higher or it's going to turn over? That's why you start looking for those hook and cross patterns. And notice on the weekly, we're clearly oversold, overbought. And notice, it's been easy to buy the S&P with the software. The slingshot phenomenon has been going on for years. Check out the monthly. It's been slingshotting for years and years and years and years. And all this is the cycles, the cycles, the cycles, the cycles, the cycles. And yes, we're definitely going to 2614 and higher as those markets implode and the credit bubbles start bursting around the world. You're going to see this go to 3,000 and above. But eventually we got the big one. Any fans of Fred G. Sanford? Sanford and Son years ago? He'd put his hand on his chest and he'd say, "Elizabeth, I'm coming to join you, honey. I'm coming to join you." Well, when Europe and Asia, I believe, will implode first, the U.S. is not going to be far behind. And we're going to have a massive scale sell-off, and the markets will definitely crash like it did last time. Well, guess what? How do I know the software? We talk about painting the Picasso. I've been trading with this software for so long that I can tell exactly what the software is going to do before it does it. And I even know what it looks like on other time frames based on price action and based on signs and symptoms. So when we get the big imploding market, you're going to see this go down in this big correction. Yes. Is it going to go to zero? No. But it's going to drop at least 50% of the value. I don't care if we're up at 3,000, it's going to go to 1,500. If we're at 4,000, it's going to go to 2,000 and more. And what's going to happen with the software? It's going to go all the way toward oversold. So the tactic right now for the S&P has been what it has for months and months and months and even years. We've been buying weekly, daily, and 4-hour slingshots, but taking aggressive profits because these guys are deeply overbought. But until we start to get the hook and cross pattern, those little retracements are going to be minimal. And you can see the last time we had these hook and cross patterns, and we're about to get one eventually on the weekly, but I think we're going to probably go to 2614 before that happens. But I'm keeping an eye on it. But notice these red lines, hook and cross pattern, hook and cross pattern. They got another one over here, hook and cross pattern. Way over here, hook and cross pattern. And notice what the daily does every time. As I turn my auto scroll off and we go back in time. When we get a weekly hook and cross pattern, the daily moves from overbought toward oversold. We go further back. When the weekly did the hook and cross pattern, it goes from overbought toward oversold. And again, it's like magic. When you go from the hook and cross pattern and it moves from overbought toward oversold, it continues to move toward oversold first. And then, yes, this is where the weekly reversed and started slingshotting higher and higher because the weekly turned in the same phenomenon, moving higher and higher. So again, I don't care what you trade. This software will make you a better trader simply by aligning the time frames. Well, that's great. Well, Gary, how do you align these time frames? Well, guess what a hook and cross pattern is? When you get a hook on like the daily, that tells me my lower time frames, the 4-hour, 1-hour, 1530, I like to call the workforce, right there. Foreman and the workforce. H4 is the foreman. The workforce is the 1-hour, 30, and 15. When I get a hook on a daily, that tells me that 4-hour, 1-hour, etc. are in alignment. When I get that slingshot phenomenon, which happens when you're going in the direction of the higher trend, you tend to slingshot higher and higher, or the higher trend's down, you slingshot lower and lower. The slingshot engagement process is also telling you this is an alignment. So that AI feature, this software has been continually changing and improving based on all of those data points and based on this process of continuing to follow the line of progression and the cycling time frames. So again, if you're taking notes, 2614 is your next stop. And yes, it will be in a stair-stepping affair, and know that we're overbought, so we're likely to get a little bit of a move down because we need some depressurization, but we keep buying those slingshots over and over and over, and we're going to 26.14. And the critical level to watch is this 25.40. As long as we stay above that, we're going to 26.14 prior. As long as we stay above this, we're definitely going to 26.14 before the next big, larger, more time-consuming retracement. Crude. Crude's the same way. Here I told you about crude before. I showed you the time frames aligning. Well, crude is about to finish this up move, and it's going to have a dramatic reversal in the coming weeks and months. Why is that? I mean, a massive reversal is on the horizon. Check out the monthly. The monthly's still up, but it's moving in toward overbought territory. The weekly is still up, but it's grossly overbought. And the daily is overbought territory. And notice it's still slingshotting phenomenon while the weekly's finishing the cycle. So yes, I think crude still has a little something left to go towards the upside. Then it's going to give us that big reversal. Remember the hook and cross patterns. It's like magic. Every time we get a hook and cross pattern, we know when the daily gave us the hook and cross pattern, as we see here, that 4 hour did what? It went from, and I turn the auto scroll off so I can go back in time. It went from overbought all the way to oversold. Price went down. Then we got a fresh new hook and cross pattern as the daily slingshotted back up. My weekly was still up during this period. So we knew this was buy the dips in the uptrend because why? We're following the larger time frame. Oversold towards overbought. And I do expect we're going to see a little something left. And those of you that like Ichimoku or know anything about it, I love it because it gives me future support and resistance levels. My prognosis is for oil to grind a little bit higher. It's going to run into this cloud area, and it's going to reverse big time as my monthly turns over, my weekly turns over, and we start with a fresh new cycle down. Like we had over here. Another cycle down. This is the cycle up, and we're going to end up with a lower high. Obviously, we're not going to go way up here and make new highs. We're going to end up with a lower high and a lower low. And we're simply going to start what? Once we reverse, we're going to start selling daily and 4 hour slingshots. For now, while the weekly is still up and the monthly still up, we keep buying them short term. Short term is the key. Because why? Because we are going to have this big reversal coming sooner than later. Now, this huge block right here represents that cloud on the monthly, but it's a massive previous resistance level that's about a $10 range. So as we're breaking in the 55, we have all the way from 65 up to 70, really about a $15 range. That's massive resistance. So yes, I'll keep scalping this toward the upside, knowing the big reversal is coming, and I'll take that in consideration when I get my hook and cross pattern. Last time we got the hook and cross pattern on the weekly, it was way up here at the same 55 range, and it went all the way down about $10, $12 down to 42. I expect to see more of the same when the weekly turns over. So yes, this could grind a little bit more. I'm not looking for it to go too much higher. I'm looking to run in this massive resistance up here, or on a monthly perspective, into the cloud and reverse. And we're going to get that coming soon. Remember, the monthly can give us the early time. It's going to be a much later, a lagging scenario because it's a monthly. Price is already going to start to go lower by the time this monthly turns. But we can get in early based on a daily doing it and the weekly doing it. And you're going to see oil prices start to stair step down. So watch in the coming weeks, perhaps month or so, as it reverses and starts going down strongly. And those of you that have access to the software will be on top of it as we discuss that this up move is getting dangerously close to finishing and the new downtrend is about to start. Gold. Gold is another one. As I go, let me show you a daily view. Gold is another one. We're in the process of finishing this correction, and then gold is going to go soaring higher again. Yes, it's possible gold could go a little further down before the reversal, but the bigger picture is clearly to go much higher in the months and years to come. as the markets start imploding, gold's going to be a safe haven, and it's definitely going to go much higher. Oh, this is silver. Sorry, I'm on silver at the moment. And this would be the same for gold based on it could go a little bit lower, but not much, and you can end up with a higher low and a higher high. If you don't have silver in your portfolio, you're missing the boat. Because I have a projected target within the next 10 years, silver will be trading around $200. Could happen much sooner when the markets implode. Say that happens in 6 months, a year. Silver could start to dramatically increase at a faster pace. But definitely by the next 10 years, if not sooner, you're going to see silver trading not at $16, not even at $160. You're going to see upwards of 200 and above. And we're following the cycles, and these time frames finish their cycle. We buy these dips. I talked to our students here when we had this big dip. We were oversold. I said, we got the big PAI hook. Buy this, and it's going to go up, and it's going to make a run back towards our 18 target. We're going to eventually break 18, convert it to support, and we're going to keep going. But we need to finish these cycles. The weekly is process of depressurizing, as I like to call it. When we get our next weekly cycle up, that's the opportune time, if you're not already in silver, to go ahead and get in silver, because this higher low, higher high will play out in the months and years to come. And I promise you, this $50, that's a 21 here, but when it was up around $50 and pulled all the way back, that is going to be a stepping stone for the $100, $150, $200 price range, and it will go soaring past that in the years to come. But follow the cycles no matter what you're trading, and you're going to be on the right side of the trade, on the right side of the market. We have a currency pair called the pound odd. This was one we bought in our live trading class as we were watching a weekly cycle. I said it weeks in advance to expect that this weekly was going to reverse, and we're going to get a PAI hook and a trend momentum cross, and this was going to rally hundreds and hundreds and hundreds of pips. We're up over 800, we were up over 1100, and we had a pullback. And this is an opportune time to keep buying the dips in the uptrend. My weekly is still up, but I want to call your attention to this monthly. We had a monthly slingshot that ran off and engaged down and failed. So we had a low, we had a high, we had a higher low. During this period, as this pair went down several hundreds and hundreds and hundreds of pips during that pullback, I was telling students the whole time, as soon as the weekly finishes the cycle, buy the daylights out of this thing, because this is going to end up failing, turning and hooking out. You can go back in the archives, and I painted the picture when this was engaging down. I said, watch in the coming weeks, this is going to turn and hook back up. And when it does, it's going to take off and go back toward the previous swing point high. And guess what? My swing point high on this pair is still another 500 plus pips away at 75.50 range. And it's going to go higher than that. That's a guarantee. This monthly is already spoken, and for months we've been long on this thing, and we're going to stay long. Why? Because the cycles are with us. And my weekly went from the PAI hook on that monthly. When it disengaged and hooked back up, what does the weekly do? It goes from oversold to overbought. So we bought it live in class, weeks of upside pressure, hundreds and hundreds of pips. Well, guys, I don't care if you trade Forex, stocks, commodities, futures, doesn't matter what you're trading. A couple of these trades, when these alignments occur, will pay for your memberships and then some. Absolutely. Let's switch gears. I know people love to talk about stocks. Well, here's Baba. Baba is a great stock. I think it has much further upside in the years to come. Again, remember, as the markets implode and those trillions with the T continue to flow into the U.S. markets, these stocks like Baba and others, including Google and some of the others, you're going to see a lot more of this movement higher in a stair-stepping fashion. But notice the hook and the cross pattern on a 4-hour. We got the hook and the cross pattern, and what did we say at the beginning of this presentation? We said a hook and cross pattern means you're going to go at least to the sweet spot location. And look where it went to. Here's my 38.2, a 50, and a 61.8. There's my sweet spot. I expect to see Baba give me a higher low and a higher high in the coming days. Why? Because look at the weekly. The weekly is overbought and it's starting to turn and engage up. And my daily is starting to hook. That's part of the process, but it's still up right now. So I'm expecting to see the daily continue what it's been doing. Slingshot, 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 slingshot. And this is what's new. Your hook here on a daily is a precursor to a slingshot formation. And what happens when a daily hooks? If we can get the hook and the cross to continue and get a little more downside movement. So I think we do have more downside for Baba first to end up with a higher low and a higher high. But as we watch this and the hook starts and it follows through with a crossover, watch the cursor, crossover, then that tells me this 4 hour is going to continue to move from overbought toward oversold, from overbought toward oversold. So I keep an eye out for those. And early, while I'm waiting for the buying the dip of the uptrend, I can scalp this toward the downside. And notice the hook and cross pattern delivered exactly what we said it does. And I don't care if you're trading stocks, futures, commodity, ETFs, bonds, it's the same thing. Notice the 4 hour is slingshotting higher on Amazon. Why? Because my daily is overbought but still up. My weekly has been what? Turning and moving up. So what's the prognosis for Amazon? It's going to continue to stair step higher and higher in the weeks to come. My monthly was turning over and it's engaging up. So check this out. Can you buy Amazon and say, I'm going to buy that slingshot? I'm going to buy the slingshot. I'm going to buy the slingshot. I'm going to buy the slingshot. Sure. Absolutely. For options traders, when I get a weekly hook and cross pattern, it's going to take weeks for that weekly to play out. And I know I should be in it for at least for several weeks minimum. If I want to trade intraday type of moves and I want to use options, then you could use the daily hook and cross patterns, or even a 4 hour if you're going to do an intraday type of trade. But it's the same hook and cross pattern that dictates even on stocks, right? We got a hook and a cross on a weekly. What happens when you get a hook and a cross on a weekly if you're listening? It means my daily is going to do what? It's going to move from oversold all the way toward overbought. And then it slingshotted higher. This is expected. Why? Because the weekly is up. The monthly is up. So you can anticipate when we're going to get this slingshot phenomenon. And that's why I type it in for our tactics. Goldman Sachs. I think Goldman Sachs has much higher to go as well, but it's part of a slower time frame right now, giving us a little bit of a pullback. My daily was turning over and slingshotted up, and we made a new high, but it's getting ready to turn back over. So yes, I do see further upside for Goldman Sachs, but I also see the time frames that the weekly's still up. So what do? I keep buying daily slingshots. Remember the rule. If my daily trend momentum and PAI are up, I buy 4 hour slingshots. If my weekly trend momentum and PAI are up, I buy daily slingshots. And when the daily's up, we buy 4 hour slingshots. And price will continue to climb and go higher. Yes, eventually we're going to get the weekly to turn and give us a hook and cross pattern like we did on this monthly. And our students pegged this move down because we got the hook and cross pattern. Right there, hook. And it wasn't a whole lot of cross like we had over here, right? But we still got the green below the red, and we still had slope and angle toward the downside. So what does that mean when a monthly gives you a hook and a cross pattern? The weekly is going to move from overbought toward oversold on cue every time. So that tells me for weeks I would be in a put scenario, knowing the market was going to go lower for several weeks because we had that monthly hook, which meant my weekly was going to go from overbought toward oversold. Google, all the same. We're stair-stepping higher, and Google's going higher. Well, that's pretty easy, but why? Well, my weekly reversed on a big weekly slingshot, and it's risen from this 917 up to 1049, and previous swing point up here was at 1062. That's a $150+ move based on following the hook and the cross and the slingshot. Well, why is Google slingshotting higher and higher and higher and higher on the weekly. Check out the monthly. It's still up, and it moved from oversold towards overbought, and it's continuing to slingshot higher and higher. So where's Google going? It's going higher, but that's when I look for my opportunities to get these hook and cross patterns on the lower time frame, to allow for these corrective phases, to look for my Fibonacci sweet spot location. You can't make this stuff up, right? When we had our swing point low and we came up and we got a hook and cross pattern right there, where did it go? It went right into the sweet spot location to then slingshot higher right out of that area. So it's like clockwork. Hook and cross pattern equals a Fibonacci sweet spot location. And why do we expect higher lows and higher highs? Because the higher time frames are still up. How cool is that? And we have several platforms to choose from. And for those of you that trade other things like the Russell, S&P, many other things, in this platform, there are over 800, not that one, 800 symbols, including stocks from around the world, hundreds of U.S. stocks, commodities, futures, ETFs. So the Russell's in here. There's numerous things in here for those of you that like to trade. No, the software doesn't work on every symbol of every platform. It doesn't need to, right? Why would it? Because after it's over and done with, if you're gaining in investments or growing, does it really matter? Because I don't know anyone that trades hundreds of stocks. They usually pick out a few of their favorites and follow it. Well, guess what? When I have a software that's telling me when to buy and sell, that's my favorite stocks. And I make it hundreds of different stock options, yes, or stocks to choose from, and multiple different financial markets. All right, so let's continue. There are people out there that like to trade bonds or ETFs. Well, I wanted to show you silver to go back to, I already covered it, but I wanted to take this in consideration. You remember when we talk about the hook and cross pattern? Well, check out the tools in here. This is what we call our templates folder. And you have from the basic setups to the Ichimoku cloud with the automated trading system, to our Platinum Asia, which is a scalping system in the Forex market, to the Slice of Heaven Finder, which works on all markets, to our Triple P, Parabolic Power Play, which works on all markets. There are numerous opportunities and tools within here. Scanner, so there are literally numerous preset templates for you. Well, this is what we call the trigger. And a trigger is so smart that it's intuitive based on the time frames, right? So when you look at something and say, well, Gary, you remember what you said about a hook and cross pattern? That it tells me when I get a daily hook and cross pattern, it's telling me that my lower time frames are in agreement that they're moving higher, right? Well, one thing we don't know at that point, well, what is the higher time frame doing at this point? Is it with or against the move? Well, these little triggers, some are small, some are large. It's part of that AI interface. It knows what the lower time frames are doing based on the hook and cross pattern, and it looks to the left of the chart and says, okay, my lower time frames are with me, so I'm getting a large trigger to say the lower time frames are with me, this daily time frame's with me, and my weekly at that point was starting to engage right here. It didn't last long, but it did for a few weeks when this was engaging up. So it told me, based on this swing point low off of that daily, that we were getting multiple time frames aligned. So it's in a visual picture for a trigger. And this is a different template. It's got different things on there. So guess what? You can actually add it to any template you want. If you like the Ichimoku template, which I do because it projects future resistance support into the future, and I have my PAI hooks and crosses, and notice you still get your triggers up, you get your triggers down. And a hook and cross pattern combined with a trigger is the most powerful thing on earth. So these triggers have been growing in popularity because it's an easy symbol. When I see a red trigger, I sell. I see a green trigger, I buy. But we tie it in now with the PAI hook. Now, admittedly, some market conditions you might get a hook before the trigger, and some you might get a trigger before the hook. So if you're conservative and you're not quite sure to jump on the first hook you see, which I've been showing you, what is this is 30-year bonds. When I get a hook and I get a cross, what does that tell me, right? Daily hook and cross tells me I'm going to do what? My 4-hour is going to go from oversold toward overbought, right? We got a hook up, oversold towards overbought. So we had 4, 8, 12, 16, 20, 24, several days of upside pressure, and we're getting a little bit of a pullback as we notice we're starting to turn over with the hook and cross pattern down. So check this out. On the previous move, we had our swing point high to swing point low. When we had an early hook and cross pattern up, where should we go? We're going at least to the sweet spot. Check it out. On cue, and this was days ago, we got the triggers and the hook and cross pattern. Everyone understands that D1 means we're on a daily, and each candle represents a day, right? So we had days of this, and we had a predestined target to shoot for. That's why I love adding our customized Fibonacci extension retracement scenario with the hook and cross pattern. Well, we can add the trigger system to it as well. Well, remember, a hook is a precursor to the lower time frames telling you they're in alignment. And the trigger system is a precursor to tell you not only is this time frame aligning, but based on the type of trigger that fires, the other time frames are aligning together. So that's why the hook and cross along with the trigger is the most powerful thing on earth. And where are we going? Bond prices are not going to go, if you look at this big picture, bond prices are in this A, B, C, D pattern. Yes, we're getting a pullback toward the sweet spot, but we're going to end up with lower highs and lower lows. And everyone understands, as far as the bond prices, when the Fed starts raising interest rates over the next few years, whether it's gradual or more rapid, the stronger this down move will take. As they start raising interest rates over the next few years, you're going to see bond prices continue to stair-step down. Well, check this out. This is what we mean by taking a Fibonacci retracement and converting into a combination retracement extension. So when I run my swing point high up here from my A down to my low of my B, and C is at or near over, it's too early to call because we need to break down some more and eventually break a new low to guarantee this is over, but we can still trade the cycles. Those of you that have been in our service, while this was moving up, I said, and I painted this Picasso and said, this is going to turn back down and this is going to hook down. Weeks later and even months later, it did exactly that. Right? So where's this extension retracement combination? When you end up going into a Fibonacci sweet spot retracement, we're going to end up going down to the 161 extension. If I go 38, 50, or 61.8, that is my 161 extension. If I go deeper to a 78.6, then I'm going to target a 127 extension. If I go very deep to a 88.6, then I'm going to target a 118. And I use this based on the cycles of the time frame cycling and ultimately the hook and cross patterns as we watch the stair step of this moving lower highs, lower lows, lower highs, lower lows. So this is a destiny. We're going to end up down here at 125 in the years to come. It depends how quickly the Fed starts raising interest rates. The quicker they raise it, the faster we're going to get down here. In the interim, I think this is just a simple little bounce off the cloud temporary move, and we're going to end up with that lower high and lower low in the coming weeks and months. But the best news is, Charles, it doesn't matter if I'm worried about, well, I want to buy this now with my triggers and sell it with my trigger short. Yeah. And we're in the process of this trying to engage and turn up at the moment, so that's why we're starting to rally a little bit. But I don't see this as going and breaking new highs. No way, shape, or form. And my daily is also in the process of finishing its cycle. So once I get a daily PAI hook and a trend momentum back down, we're going to be selling the rally as it's running into the cloud, this big resistance zone, sweet spot, and we're going to start to look for this to move back toward the previous low and start making new lows. Okay? Lower highs, lower lows, and when is this up move over? When the daily hooks and crosses. When we get the hook, you can start to see the 4 hour starting to turn over right now, but it could still slingshot higher while the daily's finishing the cycle. But once we get that beautiful hook and cross, that tells me what? My 4 hours is going to go from overbought to oversold. All right, so I'm going to draw you a line here. Last time we had that hook and cross pattern, and then we had it over here. When this engaged down and go on and make new lows, got the hook and cross pattern, right? So this is what I mean by slingshots and hook and cross patterns. My 4 hour went from overbought toward oversold. And I'll turn auto scroll off. That's the slingshot right there. And here's the previous one over here. It went from overbought to oversold because the daily gave me a hook and cross pattern. Later, the daily slingshotted lower, as we would expect it would, because the weekly was turning over, headed lower. And what happened? My 4 hour did it again, went from overbought toward oversold. Well, now it's reversing back up. Sure, we got a trigger to tell us that. We got the hook and cross pattern. So remember our little rule? When we have a Fibonacci sweet spot location, and the last time we were overbought was in this area, almost a triple, quadruple top, so it really doesn't matter which one of these we select, we knew once we got that hook and cross pattern, we would start to move toward the sweet spot. Notice the previous time, well, Gary, we got a hook and cross pattern right there. What happened? It went from this swing point over here as it started to hook and cross and went toward the sweet spot before it continued to slingshot lower and lower and lower. Why would it do that? Because my daily is moving from overbought toward oversold, overbought toward oversold. So this is what I mean by following the cycles. It gives you the ebb and flow of the market. I can anticipate what the market's going to do based on my system calculating support and resistance. Based on the hook and cross pattern, that means I've found support when we hook up and we found resistance when we hook down. I've found support when I engage up in a slingshot, and I've found resistance when I slingshot down. And it means the same thing. The time frames are aligned. Well, if that doesn't excite you, we can automate this for you into our trade management system, Expert Advisor Properties. In here, we can tell it what we want to do. Do you want to take a trigger long or short? Do you want to use my position? There's the different types of trigger, position trigger, scalper, optimized trigger. Those are different types of triggers. And do I want to, in this case, use on this breakout? Do I want to use my slingshots, right? Do I want to slingshot long, slingshot short? I can set all this to true, false, and customize this to whatever I'm trying to accomplish. So when someone tells you, hey, the trend is down, we got a trigger short, we got multiple time frames moving from overbought toward oversold, we know the trend is down, you can tell it to sell the rally in a downtrend, and it'll do it automatically for you. Or you can manually just click and drag and sell it or buy it with a simple click of a mouse. That's the beauty of this system. It is intelligent because it knows where the time frames are in relation to their cycles. And these symbols and hooks and cross patterns tell me the time frames are aligned. That's what makes this system such a high probability and so successful for our students. We've had students that have been around since day one, year after year after year after year after year after year after year. Going on 6, 7 years and counting since we've been with opened our business, GPA Trading. And before that, they were with me at another institution. But that's okay. It's because it works. You're not going to stay here for years and years and years if it doesn't work. And once you learn this little simple hook and cross pattern, you're golden. Year after year after year after year. And what's an important statement is this can never become obsolete. It's constantly learning and getting more and more optimized each and every time as more data points come in. And there's not a market condition that will ever create or happen that this system can't anticipate. It's future market movement. And that is simply by following the cycles of the cycling time frames. So even though I think the market's going much lower in the months and months to come, you can't deny when you get a daily, a 4-hour, weekly starting to turn up, it's going to move higher, certainly. And that's the beauty of this system. It cycles from one extreme to the other, and the only time it's interrupted is via this slingshot phenomenon. But as I've been showing you, based on the higher time frames, you can anticipate when you should start buying daily slingshot. In this area here, why did the slingshots go higher, and in this area over here, slingshots go lower? Why? Check out the direction of the weekly. During this period, my weekly was reversing, going higher, and during this period, my weekly was topping and going lower. That's why it slingshotted lower over this area, and why it was slingshotting higher in this area. And watch the weekly. It's just simply about the direction of the cycles. When the weeklies are up, we go higher. When the weeklies are down, we go lower. Pretty simple, right? Very simple. So again, I don't care what you're trading. GDX, one of our favorite ETFs we trade. Love it. It too is in the process of going to finish with a higher low and a higher high. Yes, we could go a little bit further. But what I told our students in class the other day, and I did it on gold as well, when our daily reversed, it's time to buy this thing because it's going to go into the sweet spot location. Notice this. We were moving lower and we got a daily hook and cross pattern. So what happened? Check it out. From the swing point high to the swing point low, and I'll even change this color so it's contrast to the one that's already on there. Let's change this to, let's do magenta. Looks good on that background. So what happened when I had my swing point high to my swing point low, right? Here's my high. We turned over and we came down and got a hook and cross pattern. What does that mean? It's going to go into the sweet spot location guaranteed. As long as my trend momentum PAI hook and cross pattern, we're going up there. What did GDX do? It went from the low straight into the sweet spot before slingshotting lower and reversing. Well, why did it do that? And then slingshot again to make another new low? Because the weekly is down. Right? Pretty simple. So see, so all I got to do is look left and right, and this does it automatically. So when I know my weekly trend momentum and PAI are down, yeah, I could still buy the PAI hooks and look for retracements to sweet spots. But the likelihood we got a little bit further to go before the reversal is pretty good until what? My weekly reverses. And admittedly, the weekly can reverse before it goes all the way. But regardless, I'm buying the daylights out of GDX when my weekly turns and hooks. Whether it does it prior to coming all the way to oversold, or it looks like this over here from all the way from oversold and reverses. And you can peg it by that. Massive moves on these weekly cycles for weeks and weeks higher. And again, the reason I wanted to point that out for you is you have the option to add your triggers to any template. Yes, we have many to choose from that incorporate numerous other templates we have, but you can customize it to your own and then save your own template and call it, this is the DP template. And I do my DP template, and it might be this Ichimoku plus the trigger scenario. And all I got to do is save it and name it. And then I'm good to go whenever I want a DP template. It'll be in this list. Boom, click on DP template, and I'll have Ichimoku with the triggers on whatever symbol we're on. Now, remember the hooks and the cross. You remember the angle and separation of trend momentum, right? Hook and the cross and the directions, etc. Well, guess what this is? This is what we call our market scanner. The market scanner gives us at a glimpse all of that information at your fingertip. Notice these little arrows. Those represent the direction of the trend momentum. Are they up or are they down? Are they slightly turning over or are they already crossed to the downside? And it depends on the color. If it's a full arrow, it means it reversed from oversold territory and it's going up. If they're hollow, it reversed from other than overbought territory and angling down. And it's by time frame. Notice we got triggers in there. It tells you trigger down on a 15-minute on the dollar yen, a trigger up on a 1-minute on the dollar Swiss. And yes, you can customize this to be any symbol that you would like, and all you got to do is drop and drag, or we show you a shortcut in which I can type them all in to exactly what I want to customize my scanner. So whatever is in this market watch, which again, in this platform, we have many to choose from. It's hundreds of symbols. I can add that to the scanner and it will tell me all this information. I just use this current template that has currency pairs. But again, you could put stocks in there, any symbol that's in this market watch. Fair enough? And it gives you everything I need to know. And if I have a trade open, you see we have an open sell on the pound dollar. And we have other things in here if it's truly running or not, or there's no trade. And then again, you base it on the cycles. It tells you where you are in that relationship and whether a trigger has fired, yes or no, and if it's going to be firing in the time frame cycle, right? So all of this information that we were watching on here with the triggers, with the slingshot formation, with the direction of the trend momentum and the PAI, all that is in the convenience of a scanner. And once you learn this, which it takes a few minutes to learn it, sure. But once you learn it, it works on all time frames, all markets, and it's the most beautiful thing ever. Not just because I create it, because I have thousands of students around the world that are very successful because they utilize this system. Now, what you're also going to have is you're going to have my personal classes, live trading classes. We spend 6 to 8 hours a week in class where I paint the Picasso and tell you as soon as this hooks, buy this. As soon as this does that, sell it. Or in the case of the line of progression, as you've seen on many of our charts where I'll type in there, for example, back to, let me go over here to one where I have that information in there, where we're telling you to go ahead and buy and sell based on the line of progression, right? So here's that pound dollar trade that's up hundreds and hundreds. This one trade, depending on how many lots you're trading, is enough to pay for your membership and could be for years. Because these things tend to run when you get the higher time frame. And I promise you, as this is disengaged and going up, we're not finished. We're going to go to 78, 75, 60 range, the previous high, and then we're going to work on going higher towards the cloud up here. And as long as my monthly trend momentum and PAI are up, I know what I'm going to be doing. I'm going to be buying daily and 4-hour slingshots. And once the weekly turns over, I'm going to start buying weekly slingshots as long as that monthly stays up. So we tell you exactly what to do, when to do, how to do it. And yes, you could throw the trigger on this system as well. You'd see we got a trigger to go short, and we got a trigger to go long. It's like magic. And why do we think we're still going to go higher? The weekly is moving toward overbought, but it's still up. So yes, we're going to continue to stair step and make a move toward my previous swing point high, and that's that 76.50, and we're going to break 76.50 and make a new high. How do I know that? Well, we can see it on a previous pair. It did the exact same thing. And this one has already breached out and broke a new high. It's the pound New Zealand. And notice what the pound New Zealand has done. It too did the engage, disengage on a monthly. And months back, I said buy this thing because it was going to go back toward the previous high and make new highs. And you could see on the previous one, we were not quite to the 76.50. But on this one, it was up at 188. And we bought it way down here when the weekly reversed. And this was starting to turn. We said stay in there until after we break this 88 and then some. Monthly still up. We're going higher in the months to come. But yes, the weekly starting to give us that hook pattern. So guess where the pound New Zealand's going? If we can continue this hook and cross pattern, we're going to the sweet spot. And I'm going to look to buy the dip and go long after we get the weekly to turn over like it's doing and slingshot back up. Because a weekly turning over against a monthly going up, the weekly is going to be forced to slingshot higher. And because we already have the beginning of a hook here, the cross is just about to take place, but we do have the hook. That means the daily is going to start to move from overbought toward oversold. And we're going to start looking for this Fibonacci sweet spot retracement. Right? So in the coming week, if we get that weekly hook and cross to continue, we're definitely going down here. Well, what if we don't and then the daily engages back up? Buy it. We've been buying the daily slingshots over and over and over and over. And yes, the weekly's starting to hook, but the weekly's eventually going to be forced to slingshot higher. So I can scalp this minimum, even if it turns out this daily engages up to fail because the weekly needs more time to finish. I can still buy it when it starts to hook and scalp it. And this system works across all time frames. When you get a daily hook and a cross, what does that mean? A lower time frame, which in this case would be a 4-hour, is going to start to move from overbought toward oversold, right? As it started to hook and cross, my 4-hour does what? It moves from overbought toward oversold. Well, can we continue this pattern? What happens when we get a 4-hour to hook and cross? Right there, we got a hook and cross pattern to the downside on the 4. That means the 1 hour is going to go from overbought toward oversold. So I know I'm going to be in this downside move at least for several hours as my 1 hour moves from overbought to oversold. And this continues down the road. Well, if my 1 hour gave me the hook and cross pattern, what does that mean? That means my 30-minute, and just continues. Turn auto scroll off, and you go back and say, yeah, there it is. My 30-minute did it. Well, what happens when we get a 30-minute to give me a hook and a cross pattern? Here's one that went up. We got a hook and cross pattern toward the upside on a 30. That means my 15-minute is going to go from oversold towards overbought. And what did the 15 do? As I put my auto scroll back on, then turn it back off and scroll back. Oops, I turned it on, turn it off. And we go back, and the 15 did what? Went from oversold towards overbought, and that rally. It's like clockwork. All right? So I've kept you for over an hour just showing you some examples. So let's go back to the presentation and show you what we're offering. Here's some more trading results real briefly. Here's gold. Gold up here, we're up. We're not talking a couple of dollars. We're talking massive moves when the time frames align. $126 move on gold. No problem catching that trend. Here's gold to the downside. Again, not little small $1, $2, $3 moves. We're talking $150 move lower on gold. Simply following the line of progression. We got our triggers. We got our hook and cross pattern. Boom. Big moves. Here's one of my students that uses TradeStation. He uses the signal from our platform and then trades in his TradeStation account 8,600 pips on several currency pairs. He then used another tool, which we didn't show you today. We'll show you in an upcoming webinar in our toolbox series webinars. It's called the Slice of Heaven Finder, and review this in the classes. This is another type of scanner, and he used that Slice of Heaven Finder when the monthly, weekly, and daily were all setting up. It scans the market to find those trades, and it continued to let that 8,000, 8,600 pip trades run to 18,000. And here's a picture of it. If you add up all these numbers, 2,000, 3,000, 1,200, 200, 800, 800, 20, 33, 70, all these added up, or 18,300 pips. There's gold, just to show you what type of movement that is. Here's the pound odd. Doesn't matter if it's stocks, futures, commodities, whatever you're trading, the system works the same. 778 pips. Well, this was interesting. This is the pound odd we're currently long in. This was during the downtrend. The monthly was turning over, the weekly was turning over, the daily was turning over, and we knew we wanted to stay in this trend for a long period. So it started at 778 pips. We said, well, it's continuing to go, so it went up to 1,274 pips. We're not done. It kept going. We kept selling the rallies in a downtrend. Now we're up 2,270 pips. Well, that's not enough because it kept going and now it went up to 3,627 pips. Simply selling the rallies in a downtrend, continuing to let your winning trade run and continue to increase your profitability. Here's the pound CAD, 3,000 pips. We don't mess around in this class. We're serious about trading and we're serious about making profitable trades. 3,200 pips on the pound yen. We didn't even touch this, and again, I could do this in a different webinar. It's called the breakout strategy. You set these up and lower levels. I could tell it at the end of the first hour in London trading for Forex. At the end of the first hour, I want to know what the high and low is. The software will automatically calculate that for you, and I can either tell it to sell the rally in a downtrend or break it if it goes above the high or sell it if it goes below the low. Here's a trade we made over 272 pips utilizing the breakout strategy to the downside because we were in a downtrend on the pound New Zealand. There's your 272 pips. Now options traders, so I trade options. I don't need software. I beg to differ because the underlying price dictates whether the options trades are going to be successful or not. And here's one of our students that was a options trader, and he exited at 1200. He realized the time frames were still aligned. He re-entered and got 300 more, and he tells me here that he would have bailed on that trade a long time ago if it wasn't for the software. Ultimately, the software forced him to make a profit. And this was on black gold. He said black gold continues through and my subscription will be paid for very quickly. He did so very quickly on one trade, paid for his subscription. And he's been a member for year after year after year after year, to the point where he was an option trader and he developed the passion for the success of the system that he opened a Forex trading account. He fired his financial advisors and canceled several newsletters. So it ultimately saved him money. He did it on his own. Okay, Master Trader Program. It includes the software, which you just had a speck, a smidgen of what's in this system, all the tools. That's just a couple we've highlighted. The live trading classes, critical, because we show you how, when, where to use the system, and we give you long-term projected targets, like I was started at the beginning. Within the software, there's a scanner you saw briefly tonight. There's the Slice of Heaven Finder I referenced, but you didn't see it. You'll see that in the future. Or you join us, you'll see it right away. The trade triggers we covered tonight. The trade management system, you basically saw it running on that trade. And I briefly showed you some of the input data that you can add, sell the rallies in a downtrend, or set it to buy the dips in an uptrend. Customizable based on your type of trading. You can set it on all time frames, all symbols, etc. We have the Platinum Aegis scalping system. We have a triple P scalping system. We have the MPA breakout trade system I briefly showed you. Top 10 reasons why the MPA pe3 software is the best software on the planet. It calculates support and resistance levels for you. It identifies the trend of each time frame. It monitors and tracks time frame cycles. It knows exactly where they are in relation to their cycle. Therefore, you get the triggers, you get the slingshots, you get the hook and the cross pattern, etc., etc. It provides consistent entries, exit, and take profit levels based on those triggers of slingshots, and we even give you profit triggers that fire to tell you when you're in a position, Bob, you should be taking profits. It automatically does that for you. This system also can be set in advance for customizable entry criteria. That means I can lock it and set it so that when the time frame cycle and I want to buy the dip and it hooks and gives me a hook and cross and a trigger, I can tell it to only buy the trigger. So if I get a trigger short or a slingshot short, won't fire. It'll just sit there in the waiting mode, in the set mode, until you get the entry for your trigger higher or whatever your criteria is. It also fits where I can manually go ahead and enter it, and once I enter it manually, it manages to trade from start to finish, from entry to exit. It fits any trading style. Dual scanners, both the scanner we showed you tonight and the market Slice of Heaven Finder scanner you didn't see, both of those are set up to give you the next big trade so you don't miss it. It works on 800 plus symbols, stocks, Forex, futures, ETFs, commodities, bonds. Works on the whole plethora of things. And it consistently delivers low risk, high reward, high probability trades. No questions asked. Now, for attending this webinar, hang on for a moment because we're going to show you. If you go to my website right now and you look up this Master Trader annual program, on the website it's offered for $4,997 for a year. Worth every penny because it only takes a couple of trades or a few trades till you get that investment back. Well, we're not going to ask you to pay $49.97. Previous specials we've offered for $35.64. That's for 12 months, and that's a huge reduction. Well, we want to pay it forward because our students are having success. There's many programs out there that talk a big game, but they're trash. They don't hold. Their students aren't with them for years and years and years and years like ours are. Tonight's special, we're going to give it to you for $24.97. Again, that's everything the software, all updates, upgrades, and I'm constantly adding new tools. The AI is constantly updating and enhancing the software. Those are included, and it's for the 12 months. Well, with the classes, and again, we average about 6 to 8 hours per week of live trading. This is the link you're going to use to subscribe to it. And I'm going to post it in the chat dialogue in just a second. But for the first 50 people, because we want to pay it forward, we're going to give you 2 years for $24.97. 2 years. Eric, you can make this $24.97 in as little as a trade or two, or 3 or 4, depending on the volume or trading that you do, and certainly the account balance, depending how many lots you trade. You can make this as easy as 1 trade or a few trades, and you'll have the rest of the 2 years on the house. 1 payment, $24.97. That brings this system plus the class about $100 a month. If you average 24 months for $2,400. Unbelievable deal. And we recommend you do it. You invest in us, we're going to invest in you and give you 2 years access. Right there. Now, if you don't want to take the bigger investment at this point, and you would prefer to try it for a monthly basis to start, that's okay. We'll offer this for a special $297 a month, and it includes everything. Just like up here, for 2 years, you'll get it month to month. In fact, I will honor the $24.97 price if you decide you want to start with the monthly and you say, well, this is working good. I'll still allow you to sign up for the $24.97. You can upgrade it to this 2-year program. All right, so what does that look like when I log into this link? Here's what they look like. Here is let's do the $24.97 first. You're going to log in that website again, and I'm going to post it right now for you. Is this, and I'm going to put it in the chat dialogue. That's the one for the 2 years. You can see it right there. This Master Trader annual special, 1 payment, $24.97 for 2 years access. And you go ahead and fill this out, and you'll go to the next page, enter your information, and next thing you know, you'll get a username and password, and you can download and start using it right away. Immediate access. And if you decide that you would prefer the monthly to start, here's the monthly. I'm going to copy that for you and post it. If you try the link, which I see sales going through already, I appreciate those joining us. We have class this Tuesday for Gary's Market Forecast on Tuesday, where we review the markets and we'll tell everything you need. So now you have both. If the hyperlink is not working, then just copy and paste it into your browser and it'll take you to these pages. All right? And again, as promised, you get 2 years for $24.97. Okay? And that's everything that we've discussed. That's a brand new offer that we've been paying it forward to give you at such an entry level. Everyone should be able to afford $100 a month for this type of system. And if you can't afford $100 a month, then you probably shouldn't be trading, because the number one thing I mentioned in trading is you should not trade with money you can't afford to lose. And if you can't afford $100 a month, then you probably shouldn't be trading. There's the link. Again, I'm just showing the 2 different links. We want to thank you for attending tonight's webinar. I promise there are so many tools in here we haven't covered. It would take me literally hours and hours and hours to cover these, and I do cover this great detail within our live trading classes. Why the market price anticipator software? It empowers you to read and anticipate price in any financial market, on time, in time, all the time. And here's a picture of our world map. We have 117 countries and counting. We've been educating thousands of students around the world. And most recently, we have students that just recently joined us, and they've already sent me emails stating that they've paid for their subscription. They've already made their $24.97 price investment, and now they have the next 2 years to basically use it on the house. How cool is that? So we'd love, if your country flag is not on here, we'd love for you to join us and have your flag appear on our world map. All right, so any other questions? Again, it works on a plethora of symbols. It works on all time frames. This system is so unique, it can sell rallies in a downtrend, buy dips in an uptrend. It can set it to where it won't enter until after a rally is over, and it refreshes into a new sell cycle. It then will sell that rally. So your input is what rules and tells it what to do, right? All I got to do is click here and say true or false. I don't want to sell slingshots, or I do want to sell them. I want to go long, I want to go short. Well, you know what? Every slingshot makes pips, points, dollars, depending on what you're selling. Every one of them does. Some fail, meaning it won't always go to make new highs or go and break new lows, but it's based on the higher time frames.
Could you repost the links, please? Someone's requesting to post the links again.
Okay, I'm going to post the links. There's the monthly, and here we do recommend you do the annual because you're going to get 2 years. And I'll post this annual. Let me copy that again and paste it for you. Again, if you have trouble with this link hyperlinking directly to this page, then just copy it and then paste it into your browser.
It should work fine.
And it'll go here. Yeah, the sales are going through. We have several members already starting. Sales are coming through. So please join us, and you'll have class this coming Tuesday.
If you can't attend live classes, everything we do is archived.
Right. So as we log into the members area, you'll get a username and password. And in here is your active resources, the class schedule, classes on demand, download the different platforms, the software, and then the learning modules, educational modules, and it has everything in here.
Can't attend live class.
Right, if you can't attend live class, under the replays on demand, they're posted for your viewing pleasure, and you can view these 24/7. Simply click on the video. I give a little title. Here's the signs and symptoms of cycling time frames. This is a great class to review because we discuss what are those signs and symptoms. The hook and cross is part of the sign and symptom. A slingshot lower and lower and lower, a daily slingshotting lower when the weekly is moving lower, is a sign and a symptom. Talk about what is the software supposed to look like when these things unfold. We call that painting the Picasso. Here we're talking about buy the dips in the pound-based pairs, that pound CAD, pound odd, etc. Stocks, we talked about those. Everything's in here for your viewing pleasure. We talk about the hook and cross pattern equal in a Fibonacci sweet spot retracement. It's all in here. It goes back years. And in the other section, we actually go back since 2011. I had to take and let some fall off because there were so many classes in here under class archives. There are literally years of recordings that are in here. From 2017 all the way down to 2011, way back. and they're there for your viewing pleasure.
Mountain of information.
Mountain of information. So again, let me pull this back up for those of you interested in the annual. It is HTTPS. Sorry, I forgot the S. As you can see, it's in the link I posted. It's HTTPS / www.gpatrading.com/amember AMEMBER /sign up /annual 2497. Or the same thing up until the last / monthly 297 for the monthly, annual 2497 for the annual, which again you get 2 years, right? So with that, if there's no further questions, I'd like to say thank you for your time and attention. What I will leave you with along the way, whether you're trading stocks, futures, commodities, we cover all these in class. We give you projected targets, we give you time frames, we give everything sign and symptom to look for. And this phenomenon of slingshotting higher and higher and higher when a weekly goes up, it means that's the case for all signs and symptoms, all currency, stocks, futures, commodity, ETFs. And again, I've spent a lot of time on the weeklies. That's how I trade. But I love big moves. So if I'm just a day trader or a scalper, the same things apply to the lowest of time frames. When I get a low time frame Google, even on Google, and I want to trade this intraday, it's going to stair step higher when a 15 goes from oversold towards overbought. Why? I can automatically tell you when it tries to engage and fails and then turns over and slingshots higher, this price action, no question, from this view of the 15-minute cycling, the last part of this previous day's trading session, and we slingshot it higher, guess what's moving higher? My 1 hour is turning back up, moving higher. My 4 hours turning back up, still moving higher. So it's always simply, I used to say, look left and right like you do when you walk across the street. Well, just because there's no car coming from the left doesn't mean someone's not texting or coming from the right, not paying attention, or going up a one-way. Always good idea to be aware of your surroundings. Look left and right. Well, the beauty of this is I don't have to change every time frame. All I got to use is my hook and cross pattern on these time frames, like the 4 hour, because that automatically tells me my lower time frames are in agreement. How cool is that? Hook and cross pattern will be your best friend. So again, with that, I'd like to say thank you for your time and attention. For those of you that keep joining, I thank you for joining us. You will not regret it. And we do have our class meet on Tuesdays, Wednesdays, and Thursdays. So whether you can attend live or not, I spend time going over all time frames. So I tell you that based on this, it's going to move higher. It's going to take weeks or even months. So you say, well, if I'm not live in class, I can't take part in this. Yeah, because you automatically know as this is moving, I'm going to be buying daily slingshots, or in this case, 4 hour slingshots over and over and over, as long as my daily trend momentum and PAI are up. So as I'm watching this, I'll keep buying and scaling in, scaling in, scaling in, because it's in the direction of the higher time frame. And why did my daily engage and go higher? Because it's in the direction of my weekly still going higher. Okay? It's all about cycles, signs, and symptoms of the cycling time frame. That's why we call it the line of progression. And Eric, the best part is I can anticipate exactly what the signs and symptoms are going to be long before they happen, in advance. Because I can simply look at my weekly and go, hey, ever since my weekly reversed, I expect, in this case, Google to climb higher week after week after week after week. Not just because I see it here. You'll go back in those archives and see where I said it's time to buy and go long, look for a new high. Why? The time frames were aligned telling us so, and that's exactly what it did. So with that, I won't keep you all night. I'll say we could go over and show you another tool. But as again, we just gave you a smidgen or a sampling of the different types of platforms that you can use. It works in any MetaTrader platform. I only have a couple on our website, but it works in any one. So I have 3 different ones right here that I use and I recommend you use because they have a plethora of symbols, something for everyone. And whether, again, we talk about Forex, stocks, futures, commodity, ETFs, gold, silver, you name it. It's all in here. It's like Prego. And I will leave you with this. The dollar yen is a pair I'm long. I'm going to stay long, and this is a carry trade. The dollar is at a positive interest rate. The yen is at a negative interest rate. So by being long, you make money because it's going to make pips to the upside, and it's going to pay you interest payments every day. So that's why our options trader opened a Forex account, because he realized this works on any market and all time frame. Well, why is the dollar yen going to go higher? Well, the Fed's going to raise interest rates in the coming years, and the dollar is going to continue to gain on the yen, especially when the Japanese market implodes, which I think will probably happen certainly sooner than the US. This is going to go up thousands and thousands of pips over the next 6 months, year. And my monthly is cycling from oversold to overbought. It's continuing to climb. We still have hundreds of pips before we get to the previous high, and we're stair-stepping our way up there. We follow the cycles. So what's going to happen in the coming months or in the coming weeks? This is going to turn over, and watch my cursor. It's going to turn over and slingshot higher and higher like this. Turn over, slingshot up, turn over, slingshot up, as we stair-step much higher in the coming months and years for that matter. And we follow the cycles with the daily. Yeah, it's not going to just go straight up. You're getting a little bit of a pullback. That's okay, because we like buying the dips in the uptrend. So as long as that weekly stays up, we buy daily slingshots. And the weekly is still up right now. It's overbought, but still up. So buy the next daily slingshot and look for this to climb higher. Then when I get a daily or weekly hook, then we could scalp it back down, and when it reverses, we buy it again. Buy the dips in the uptrend long term. And that is for all my yen-based pairs. Odd yen, pound yen, CAD yen. I'll start buying these dips in the uptrend long term. And in most cases, except the euro yen, both are at negative interest rate. The odd's at a positive and a negative. That means it pays interest to be long the odd yen. And it depends on how many lots you're trading. We're talking a few cents a day to a few dollars a day to several tens of dollars a day, depending on how many lots you're trading. And that's in interest. So you're in a trade for several years. It makes several thousand pips, which makes you thousands and thousands of dollars. And you can even earn hundreds to thousands of dollars in interest while you're in this long-term trade. We love the cycles, and we play them to the hilt. And one thing you'll never find is a more passionate instructor. I not only create the software, I'm actually teaching the software, and I sit here and take as much time as necessary to walk you through exactly what to expect, painting the Picasso on what the software is going to do, even before it does it. So again, with this pair, same thing. I'm looking for the weekly to reverse, either to slingshot back up or bottom in reverse. When I get either one of those, a weekly slingshot or a weekly bottom and reversal, buy and go long this odd yen. It's going to go up several hundreds of pips, and you're going to make several dollars, could be tens of dollars, hundreds of dollars, again, depending on how many lots you trade, but it's going to pay interest every day. All right? How cool is that? So take care, God bless you, and we will see you at a future webinar. And again, we're loading up on many students joining us. We want to thank you. I look forward to seeing you this Tuesday. Take care, and God bless you.